Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Ehrman.
Hello, and welcome back to the podcast. Thank you very much for being here. Today, we are going to talk about which half of the book are you reading? Are you skipping some of it? Because if you are, I am seeing it. Before we get into that, I almost forgot to mention, if you are not following and you are not listening to my Without the Bank podcast, please go over to the Without the Bank podcast, download that one as well, because I am not duplicating stuff, but there's IBC stuff that I am talking about over there as well. And so you are probably going to want to listen to both. All right, let's talk about this today because I have had a lot of meetings lately where I am hearing people ask questions that just don't make a lot of sense to me if you have read the book. If you've read the book, why are you having certain questions? And I believe it's because people are not paying attention or they're not reading the front half of the book. Now, I don't care if you are reading my book or you're reading Nelson Nash's Becoming Your Own Banker. Both of those books have numbers in the back end of them. The second half of the book is numbers. The first half of the book is a thought process. It is the utilization of money. It is the infinite banking concept. People are not, they're like either skipping over that or they're not paying attention. So let's talk about it. And I see this a lot, even with my existing clients. So if you are an existing client, please pay attention. This is, as I have ads on Facebook and I have even seen existing clients when people say, oh, what is this and how does it work? They will talk about the whole life piece of it. And the infinite banking concept is very different from the tool of the life insurance. And for as much as I talk about this, I really feel like it just needs to be beaten like a dead horse, okay? So many times we are so wrapped up in how do we use the policy? The policy is so amazing. And the policy is amazing. Don't get me wrong. The policy is amazing. But we can't use the policy correctly if we're not even thinking about money correctly. Because if we're not thinking about money correctly, we don't even have the funds to put into the policy, right? We don't even have the money to pay premium. Where does the money come from to pay premium? It comes from all of those things that are a thought process around money. And over the weekend, I spent some time with friends, and these friends they're like friends of my husband's, right? So they're not, they're friends of mine too, I guess, but we just don't talk to them a lot. And none of them are clients. And so it was interesting to hear them talk about money. And I'm sitting there thinking, it's so wrong. The thought process is so wrong. So example, some friends are super, super frugal because they really believe in the whole Dave Ramsey thing, right? And so they're talking about really just how hard everything is, and they're stepping over pennies or they're stepping over dollars to collect pennies. And I don't know if you've ever heard that phrase before. It's said many ways. But they're so busy pinching pennies that the thought process isn't really there to create cash flow. They're not asking the right questions. The utilization of money isn't correct. So they're still going out and buying campers and buying boats and going on vacations and, decorating their homes and doing all of these things. And they're doing it with money that could have been used to create cash flow, that then that cash flow could be used to buy those things. But people are having such a hard time right now getting by, and they're having a hard time because they're not getting paid enough at work. Inflation is killing. I get that. But is there a way to create some cash flow out of that? And we're going to have to be super creative to do that. It's the concept and the utilization of money. And then I had another friend say, well, they're high income earners, just W-2 employees, but very high income earners. And they said, well, we want to buy some cows to use as a depreciation tool. He said, I don't care if they make me money or not, but I want cows for depreciation. And I said, oh, okay. I have looked at cows for depreciation and the numbers don't look good to me because there's no cash flow. And he didn't really, he didn't think about the cash flow piece. And I said, that's great. He's like, well, I don't care if they make me money because I'm saving money on taxes. Yes, I understand that you're saving money on taxes, but are you saving enough to offset the feed? Because you don't get to just depreciate the cow. You actually have to feed them and pay somebody to take care of them and all the things. And so when I've been sitting in meetings with people in the last couple of weeks, I've really, really noticed that people are they're just really looking at the numbers and they're not looking at the concept. And so, somebody asked me last week, well, what's the biggest risk here? He's like, there's risk in everything, but you don't really talk about the risk. Yeah, we do. We talk about the risk all the time. We just don't call it the risk. Nelson talks about it in his book, and it's the human element of things. And I did a podcast on this last week when I talked about use it or lose it. If you haven't heard the Use It or Lose It podcast, you might want to go back and listen to that because it's really a concept of human nature. Are we going to pay our premium? Are we going to utilize money correctly? Are we going to pay loans back? Are we going to beat Parkinson's law? These people that are really following Dave Ramsey are very, very good at beating Parkinson's law. They're not buying things that they can't afford. They're not overspending. But what they're spending their money on are those things like boats and campers and, second homes that have no money coming in. Are they cash flowing assets? I heard another friend of ours talk about the fact that they bought a lake cabin or they bought a lake lot. And now they're going to be putting a cabin, AKA trailer house on it. And they've got this retirement money coming in. And one of them has a pension. One of them is still working. And they want to fly around the country and they want to go do all of these things. And they're only 50 years old. Where is the money forever going to come from? The pension isn't typically going to increase with inflation. And so what happens when we have inflation? And where is all this money, right? We built a new house. We did all of these things, which great. I don't know their money situation, but I'm looking at them and they're so super young that I'm like, whoa, you got another 35, 40 years. Where is this money coming from? How are we utilizing it? Are we building a lake cabin and then putting it on Airbnb and short-term renting it? Or are we not creating any cash flow with it? And I've heard a lot of people say too, when I start talking about cash flow, somebody said to me in the last couple of weeks, I'm like, well, you could buy rental properties, you could buy land, you could buy all this stuff. And they said, well, I don't want rental properties. It's too much work. My friends, I am so tired of hearing that. Well, I don't want to do that. It's too much work. Well, I don't want to do that. It's too much work. No kidding. Everything is work. Everything is work. Which work do you want? If you don't like rental properties, that's fine. Go find something else that you do like that's going to create cash flow. But that also is going to be work. And so we have to choose our hard. And if we want cash flow, we need to do that so we can beat Parkinson's law, right? And so all of these human elements, the fact that we're paying all this money in interest, but we're trying to buy something to avoid taxes, but we have everything financed. We are, putting money into a 401k and an IRA and hoping for this huge rate of return. What is happening? We need to understand the first half of my book, and we need to understand the first half of Nelson's book. Nelson and I did not write that just because we were bored and had nothing to do. We wrote that because it's very, very important for people to understand those things. And sometimes people read Nelson's stuff and they go, well, that doesn't even make sense. I don't know why he even wrote this in here because it's all about the numbers. No, it's not about the numbers. That's why he wrote the first half of the book. If you are reading the book, which portion of the book are you reading? The first half or the second half? Did you get the concept? Did you get it all? Did you read the whole book and understand it? If you read the first half of my book and you didn't understand it, go back and read it again. If you don't have Nelson's book, Becoming Your Own Banker, you should have it. And then you should really pay attention to the first half of the book because everything in the second half with numbers will happen because it's all guaranteed. All of that will happen, but it doesn't matter if you have the money in the policy if you just don't know how to use money, right? It's one big circle. And so we have to understand all parts, not just one or the other. I talked to a couple last week again. This is the second time I've talked to them. And the husband just is not understanding. Well, he's not understanding because I guarantee you he hasn't read the book. I know he didn't read it the first time. I forgot to ask him the other day because I was so busy correcting his thought process that I didn't even get a chance to ask him if he read the book because his thinking was so far off of hers and hers was on key to what I was talking about because she's listening to the podcast, she's reading the book, she's doing all the things, and he's not. And so it's really a matter of having to pay attention to all of it, not just the number piece of it, which is what we want to pay attention to because that's where you can see everything happening, right? That's where everything is sexy. Well, it doesn't matter. If you don't understand how to utilize money, whatever happens in the policy is not going to be extraordinary, right? It's just going to be what it is. But can you make more money? Can you manage money better? Can you use money better if you understand how to do that? Okay, guys, let me know. Let me know which half of the book you've read. And if you haven't read the first half, go get it. If you haven't gotten Nelson's book, Becoming Your Own Banker, get it. If you haven't gotten either one of them, what are you waiting for? What are you waiting for? Let me know. If you need anything or if you have a topic, maryjo@withoutthebank.com. Otherwise, you can go to themjhotline.com. You can leave a message there. Otherwise, we'll see you in the next podcast and you have a fantastic rest of your week.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.